So you've noticed the recent spike in Bitcoin and thought it's a good time to invest, but you're not quite sure what Bitcoin is. If that's the case, let me explain. Imagine this: you're chilling with your friends splitting a pizza. Normally you'd just hand over some cash, but what if you all only had these special coupons, unique and impossible to forge? And that's kinda like Bitcoin. It's a digital currency not printed by any government, but created and tracked electronically. The creator of Bitcoin, known only by the pseudonym Satoshi Nakamoto, has remained a mystery for over 15 years, which is both intriguing and terrifying. So, how does this digital gold work without a central bank? Well, that's the beauty, and some might say the madness, of Bitcoin: decentralization. Instead of relying on one authority, it utilizes a massive network of computers around the globe, acting as digital accountants. But who exactly keeps this massive list of all the Bitcoin transactions? Enter the miners, the unhonored heroes of the Bitcoin world. These are individuals or companies who use powerful computers to solve complex math problems. What? Math problems? What it has to do with Bitcoin, you probably thought? Imagine you're a seasoned detective trying to crack a super secure safe. Inside the safe are new Bitcoin transactions, and your job is to verify they're all legit before letting them be added to the official record: the blockchain. The key to the safe? A complex math problem. This problem is like a super tricky puzzle that requires serious brain power, or in this case, powerful computers, to solve. So, when a miner solves the math problem, it basically proves two things. First, the transaction is legit. The math problem is designed to be nearly impossible to solve without having all the transaction details correct. So, solving it confirms that the transaction isn't fake or trying to spend the same Bitcoin twice. And second, the new block of transactions is added to the blockchain. Wondering about this blockchain? Think of it as a giant public spreadsheet everyone can see but no one can interfere. Each block is like a new page in the spreadsheet, and solving the math problem unlocks the ability to add that new block. To make it even more clear, let me explain step-by-step process of how it works. Miners receive a bunch of new transactions. They bundle these transactions together into a block. The block gets encrypted with a special code based on the previous block, making the blockchain a chain. Miners compete to solve a complex math problem that generates a specific code. The first miner to solve the problem gets their block added to the blockchain, and they earn a reward in Bitcoin for their troubles. So think of it like this: the complex math problem is like a high-tech combination lock. Solving it unlocks the ability to add a new group of transactions to the chain and verifies that everything inside is legitimate. Miners are competing to be the first to crack the code, and the winner gets rewarded with new Bitcoin. The cool part? This whole system is secure because it's almost impossible to cheat. If someone tried to interfere in a transaction or the blockchain, it would mess up the complex math problems for all the miners, and everyone would know something fishy was going on. Okay, enough of this math stuff. Let's talk about how these magic internet coins land in your wallet. Two ways: buying them. You can use real money to buy Bitcoin on cryptocurrency exchanges. It's kinda like buying gold online, but way more volatile, meaning the price can swing wildly. Mining them. Remember those math problems the miners are solving? By solving them, they're not just earning Bitcoin, they're also creating a new Bitcoin. But don't get any ideas about dusting off your old PC. This mining game requires serious computing power. So, is Bitcoin the future of money? That's the million-dollar question. Or should we say, million Bitcoin question. It's got all the moves: fast, borderless, secure, but it's still a rookie on the court. Like any baller, it's got its flaws too. It's got the temper of a toddler because price jumps around like a frog on a hot plate, and its carbon footprint is bigger than Godzilla's shoe size because of all that mining energy consumption. Quick recap: Bitcoin is digital money, the blockchain is its record book, and miners are the guardians who keep it all secure and running smoothly, with no bank telling you what to do. Mind blown? Subscribe for more.